Yo guys, this video is for the week of March 26th or 27th if you're looking at it for tomorrow. March 27th, weekly trading video. Something that just popped into my head today is like, if we're looking at gold, why not look into the gold to silver ratio, like how many ounces of silver it takes to buy a gold ounce. And through historical research, if you look in the past, usually silver leads gold. So I pulled out the chart and wanted to take a look because I haven't looked at it in a while. I wanted to see what was going on. It looks like the gold to silver ratio peaked sometime in 2016, somewhere around here. Yeah, and that was the major rally last year that we saw in gold from being suppressed for the last 3-4 years. Right, so we had a big move followed by a terrible downside move in gold later in 2016 during the summer months. But what we see here is that we've actually developed a bear flag, meaning the lower this goes, the more expensive gold gets to silver. Okay, so silver becomes a lot more valuable, and it looks like if this keeps going the way it's going and we get some kind of aha period like back in 2011, it looks like we're going to get a major rally in the metals. So with that said, it looks like if there's building a little bear flag here, silver is going to definitely outperform in 2017 into 2018. And I do see a lot more inflation picking up. Number one, because they're raising rates. So they're raising rates because they're probably expecting a little bit more inflation. Plus, raising rates is not always deflationary. It's actually inflationary because you keep raising rates and banks are going to actually want to lend at more suitable rates to people and businesses and all that. And it's probably going to spur the economy. We've had very low rates, a lot of liquidity in the market. Now it's time to raise rates, and we're going to see a massive flow of inflation. Depending, I really don't know how much, but there's definitely going to be asset inflation, real estate. There's going to be inflation in metals, wage inflation. Hopefully we get some wage inflation because we haven't had any. But anyways, beside the point, let's just get to this and stick with this. And I see this as a momentum builder here. And if we can break this bear flag, we're going to see silver and the metals outperform during the summer months this year and into 2018. With that said, last week I just wanted to recap where we stood with biotech. I know that on Friday the bill was pulled, but if we take a look here, it still looks like we have some. I don't know why this is all messed up. Let me take it back here. Sure. Yeah, I'm predicting here like a little retracement to 38 Fibonacci level, which should equate to 281 on IBB. So, and it looks like at least on a weekly chart, we're going to get at least another down week. So we've had 2 down weeks. That looks ugly. Okay, we've had 2 down weeks. So I say next week will be the 3rd. It'll definitely break that little trend line there. And we should get to 280 on IBB. So when it comes to Labu, this chart sucks. So let me get, this one is it's pretty much the same thing. It looks terrible. But we're almost there on that. I mean, Labu, you're always gonna overstep because it's a levered stock. So I mean, it's a ETN, so it's going to be a little bit more levered. So you're probably going to get a bigger break. I'm guessing somewhere around $40 levels when I'll start buying and seeing some volume increase. Maybe to 30, 38. I like 37, somewhere sub 40. If you start buying Labu, it's definitely going to be worth your while to pick up some shares there. We'll see. It looks like a small bear flag here. And I'm definitely thinking this week coming up is definitely going to tell. So I'm already up 7% from the time that I bought LabD. But this is where I'm looking. This is where everything's going to count next week. let's look at high yield debt like I talked about last week. There's a lot of correlation with high yield debt and metals. So especially if oil is starting to trend down, okay, if oil's trending down, then we're going to get a lot of scare in the high debt market because a lot of these oil companies can't produce and compete with a lot of the Saudi companies at really low levels of oils, and they're very highly levered. So we'll see what high debt does next week, because this is a big telling period. If this trend breaks, we're definitely moving down to make lower lows here, and that can spur a small, pullback in the stock market. Can make it a lot worse than it already is. It seems like people are starting to buy the dip already in the stock market. But if this starts breaking lower and lower, we're going to see metals shoot up. Oil's probably going to head down as well. That's probably going to lead. The oil market's definitely going to lead where high yield debt's going to go, which is going to push the metals higher, in my opinion. And overall into 2017, 2018, it looks like that bear flag and the gold to silver ratio is you're going to definitely see silver lead the way, and inflation is definitely going to lead the way. So let's see what happens this coming week with high yield debt, and see if the oil market can sustain a rally. If so, the stock market will definitely have a rally. But over the next few weeks, I still see the scenario playing out. So let's see what happens during the week, and we'll make another video next week. All right, you guys have a good weekend. Have a good week. Bye.